Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
Well. Hope you're doing well, guys. Welcome to another episode of the Trader Coffee Break. Hopefully there's no tech issues this week and you can hear me and you can hear Akil and everything's fine and dandy. Except the amount of news out this week and all the fundamentals that are out this week. And I've had lots of traders, I don't know what it is, but over the last few days I've had at least 3 traders message me and say, I feel like I'm doing something wrong, or I lost, I was in a trade I shouldn't be in. And when you get to the root cause of all that, a lot of it is to do with boredom. And boredom comes from being in markets, looking for trades where there's not a lot happening, and then they start to doubt themselves and think they should be doing more, when really all it is anticipation. And that's what's going to pay your bills, having the patience and the discipline to wait and not involve yourself and wait for the actual opportunities. But not only that, there's news that causes real big problems for people as well. So today we've got FOMC, we've got non-farm payroll Friday, there's ECB press conferences, all these different news events, Asia, unemployment and banking news and all this kind of stuff. There's a lot going on. And we thought it'd be a good topic to cover how to handle it, what to stay out of, and things to be mindful of. All right, Akil?
Yeah. Can you hear me, Jason? Just want to make sure I can hear you.
I can hear you fine.
Okay,
I can hear
perfect.
you fine.
I'm frozen on my end, so we are both frozen.
You are frozen.
I can hear you. I don't. As soon as I jinxed it, talking about everything's going well, things don't go well. So. We can be. I'll still talk. I won't zoom out. But yeah,
we're getting Akil's voice streamed in from the moon right now.
He's
on the moon. We're getting a frozen image of Akil.
I told you I was having a new computer built. I didn't tell you where it was being built at. Got some moon rocks in there to add the edge. But yeah, I'm in the same boat as you, where I've gotten so many messages about news this week. Over the last 2 weeks have really been a handful of like the big major news events. As you mentioned, there was a monetary policy from the Bank of Japan. There was ECB last week. We have FOMC today, Bank of England tomorrow, non-farms. Like it feels like we're getting all of the major big news gears at the same time in the markets. And the question that I always get from a lot of traders is, what should I do? And unfortunately, it's a what should I do after they've already made the mistake. And the mistake is seeing the news, understanding that the news carries or will provide volatility to the market, and getting caught up in kind of, we call it the internet trader kind of sensation of like, hey, I'm going to try and catch this move because everyone out there in social media is telling me how much they made. Of course, the ones that lost money are quiet. And it's this FOMO of missing out. And unfortunately, when you take that path and you're trading, it goes against everything we preach, right? What we preach here all the time is treat your trading like a business. You study, you work, you develop an edge, and then you come in day in and day out and try to consistently execute that edge. It's a solid business plan. It's not sexy, but it's profitable. As soon as you start to gamble, you're doing the opposite. Now you're going outside your edge. You're kind of hoping and praying that you're going to get that big win. And yeah, that big win happens every once in a while, every time you get on the right side of the market. But more times than not, or eventually, you're going to end up with an even bigger loser that's going to take away all of the hard work that you've done and put you right back at break even, or even worse, in a drawdown. And it's just, we understand. I guess I would ask you this, I guess we all have that temptation, right? We're humans. We want the big win. We want the lottery ticket, the jackpot. What do you tell yourself, or what did you tell yourself maybe as a younger trader that helps you stay out of those situations.
Yeah. That's a great point. I think I definitely agree. And as I was younger trader, I was more inclined to want to jump into those opportunities. As the years have gone on, and like specifically now, I just accept my trading for what it is, and I don't chase any of those additional like hype-driven moves. I've just got no temptation to do that at all in my trading anymore. But I definitely did, and the reason I need to stay out is because I understood that when you're trying to jump onto one of those, you're essentially we've lost Akil. Hopefully he comes back. But what I was saying is we essentially think that we're gonna make more money, right? But ultimately what you're trying to do is guess the market participants' reaction to the news. And whenever you try and do that, what happens is you end up in a place where you're just not going to be able to predict that. It's literally you're guessing the market participants' reaction of that news. You're not actually guessing the news. Let's see if we can get Akil back here. Here we go. This is Zoom for you, right? So let me just give you a second, guys, and get Akil back on. Let's pin him. There you go.
Sorry about that. I'm back.
He's back. Blurry. He's back. Man, technology, eh? Technology.
Yeah, I'm blurry, but I'm back. So better something.
He threw me a little bit because when you left, there was two of me on the screen because I was on the other side of Zoom, and I lost my train of thought. But
sorry
basically,
about that.
My answer was, when you try and guess, I realized that the importance of making profits over a long period of time was being consistent. And the thing with news is it's very, very hard to be consistent in your approach to that news, because one, it's usually driven from some level of excitement, and that level of excitement might change from time to time depending on your own emotions and what's going on in your life. Second of all, you're trying to guess the market participants' reaction to an event. And we all know that there's opposing opinions to everything, and trying to guess how someone will react to something on a global scale is it's near on impossible to do that. And I realized that it was definitely damaging to my overall performance over time. And the main reason it was damaging is because it was oscillating too much. I couldn't stand jumping on something and having a big win and then maybe having a big loss next time. And I would rather just have slow and steady wins. And I think everyone that I've studied that's had any degree of success in trading has come to that conclusion. Slow and steady and slow and steady. It's boring, but it is profitable. And that's the only way that you really and truly benefit from that compounding effect. So
yeah, I agree. It's like, it's like anything else in life where it's like, would you rather have the I guess the comfort and confidence? We don't use the word comfort a lot here, but the comfort and confidence of like knowing that I'm trading something with a statistical probability, we call it an edge, that if I do it consistently, like not trade by trade, day by day, but like week by week, month by month, year by year, like we're, I don't want to tempt the market guys, but we're pretty certain we're going to be profitable at the end of the year. And we're pretty certain by how much. We have this range that we'll typically be in. When you're kind of gambling like that, it's like living paycheck to paycheck, where it's like, all right, I got my paycheck in. I hope I have enough to cover the bills for next month, but like I may not. And it's like, I just couldn't imagine operating when you do this for a living. I couldn't imagine operating under that.
Yeah. I hope it doesn't run out until I get my next big win.
Yeah, of uncertainty.
Yeah.
And what you mentioned about like the impact of the news not necessarily being numbers driven, but like on the reaction of the market. I learned this lesson the hard way. I remember when I was probably in like year one of trading, like I didn't have any education. I was out there, just trying everything on the internet.
I can feel a war story coming on here.
Yep, I proudly speak about it now, but like I remember I hit on a non-farms, and I had just found out about like Forex Factory, and I went there and I'm like, oh, news, this is cool. And I'm like reading some stuff, and it's like, okay, expectation is a higher number. You click the thing and it kind of gives you like a rundown where it's like, if number is bigger equals good for market. If number is worse equals bad for market. I'm like, ooh, no one's ever clicked this box before. I've got something. So I remember placing a bet on a non-farm bullish, or I guess I was bearish to the euro dollar. And it was a positive number for the dollar. And the dollar took off, gained all this strength. And I made like a couple hundred pips in a matter of seconds. And I'm like, trading is easy.
Yeah.
Like, I remember telling myself seriously that I was going to live this nomadic lifestyle. I was going to just come back once a month, non-farm Friday. I was going to check Forex Factory. I was going to look at the number, look at the prediction, place a trade accordingly. And then boom, I just make hundreds of pips each month. And it was that simple. And of course, I'm naive. Like, why would it ever be that simple? It's embarrassing because I'm smarter than that. Like, I never fell for any like get rich quick schemes, but like, at the time, I think I was struggling so much. I just wanted something. And lo and behold, I come back the next month. I check out Forex Factory again. Bigger prediction for number, good for dollar. Place the same exact trade. Short, it goes 100, 200 pips in the opposite direction. And I'm like, what the hell? And that was kind of my first, like, I was confused. And then, of course, I researched it and understood why. But that was my first kind of understanding that, like, the number means absolutely nothing.
Yeah.
It means nothing. It's all about what the market anticipates, how the market views it, what's coming up in the future, and that there was no, I didn't have any edge in just looking at the number. It was nothing more than me it was a lottery ticket, me putting money into a lottery ticket and hoping I won. And lucky for me, I was smart enough to not make any excuses and realize like this is not sustainable and really look for something that was. So if you're a newer trader out there, or even an older trader, if you're trying that, like, trust me, just stop, right? Worst case scenario is you lose money. Even worst case scenario is you make money and now you think you found something, and then you consistently lose money in the future chasing it. It's just you might as well spend that time kind of just, fine tuning a strategy and working on the right way to trade instead.
Yeah. One of the things that I do find is exactly that. People tend to lose a lot more when they've had an initial win rather than had an initial loss. Because when you have an initial loss, you're much more fearful and you're more cautious to touch it again, right? It's like touching something that's hot and it's like, oh, I won't touch that again. I'll test it next time. But when you have a big win, it's like, I'm gonna double down on the next one, and that that really damages you. So that does tend to be the way. So I guess what is there to avoid and what is there to look out for, and how should you approach the news? I know we spoke about news on this before, but this is kind of a different angle. We've mentioned Forex Factory calendar and things like that, but really what you want to do is just think about the bigger picture. If there is a big news event coming up and you're seeing the market behave quite slowly or quite erratic, then that's when you want to start considering how you manage that, how you approach or handle that situation leading up to that news. It's not really, because that's where I see everyone getting excited or getting itchy feet. It's like, oh, there's nothing going on. I've got to take a trade and I've got to get involved with something. And they try looking for stuff that isn't there. They start forcing trades. Like this week, yes, there's been a couple of opportunities. We've got a lot of movement on the markets right now, but last few days it has literally just been sideways, like dribble for a lot of my stuff. And that's all right. And I keep saying to the traders, it's like, it's important that you see this happen. It's important that you come in and you watch other people not taking trades, because that's just as important as spotting the opportunities. Because if you get into trades that you shouldn't be in, then who knows how much money you're going to give back to the market. You just don't know. You don't know. You're not tracking that because it's inconsistent. So main news releases, FOMC. I think it's like 8 times a year or something. Non-farm payroll, which is the first Friday of the month. ECB press conferences. And then obviously anything around big big war or political announcements that are one-offs and things like that. You just want to tread on eggshells a little bit. If in doubt, stay out. And if you don't take a trade, guess what the worst that could happen is? You just keep the money in your trading account. There's no downside to not getting involved. So yeah, I don't know if you would add anything to that, Akil.
Well, no, like I said, it's you can educate yourself. You can be aware of what's coming out, when it comes out, what it means. We always talk about, your Forex factories, your daily FXs, all of your economic calendars are going to present news with 3 bullheads or a red color or whatever that they kind of rate it, where it's like high impact, low impact, medium impact. And, we say you want to stay out of kind of the bigger ones like Jason mentioned, but you also need to understand that not every economic news event that's in red means it's going to be a big movement. There are some that have historically moved the markets that will do so every single time. There are others that the market doesn't care about, but maybe in the past they were considered high impact news events. And something you can do as a trader is like any other type of test, just track it. So if you know that XYZ events are coming out today, right? Go back after the day is over, look in the market, see, did the market move during that time? And you can do that, you keep a running journal of that, and you'll have a very good idea of which news events kind of historically move the market and which news events don't. And you can start kind of working on your checklist of hey, when ECB press conference comes out, avoid, markets go crazy. Whereas hey, when ISM manufacturing comes out, it doesn't really have that much of an effect on the market. And now you're not afraid of every news. You kind of know which ones to avoid, which ones to trade through. I would also take this angle too, because we're talking a lot about avoiding news, and I think as newer traders, you certainly should. But experienced traders, you can also look at news as being an opportunity if you know what you're doing. We always talk about hybrid trading. We're both investors, so we take a look at the fundamental, stuff that's happening. And if you can find an edge in the fundamental, like Bank of Japan is a good one. The Canadian dollar is a good one, where they typically kind of come out and they typically leave hints for what they're going to do before they do it. And if you're smart enough to understand that and find yourself in a position that's in the same way that you expect the kind of the news release to be in, you have the opportunity to have some bigger trades. Now, again, this is not something that I think newer traders want to do. You don't want to get cute, but as you earn that experience, you can start playing around with being a little bit more aggressive, again, when you also have a fundamental edge. And that's a way to take your trading to the next level. I know for me personally, it doesn't happen often, but maybe 3 or 4 times a year, I'll find an opportunity where it's hey, my technical is lined up with the fundamental, and kind of investor brain takes over from one side and technical trader brain takes over from the other side, and just happens to all align. And those can be very big moments for your equity curve. So we're not just saying avoid it forever, but as you get experience, if that's something that you want to get involved in, just educate yourself on kind of your understanding of the markets from a fundamental perspective as well.
Yeah, absolutely. Great points, man. If you're watching this live and you're here with us, let us know if you've ever had problems trying to trade the news, or you've any results you've had trading the news. I'm sure if you've done it over a long period of time and you're just randomly trading news, it isn't going to go well for you. On patterns and things like that, one of the things I would say is non-farm payrolls coming up on Friday. One of the things I've noticed on non-farm payroll is, out of all the pairs that I commonly trade, the dollar yen and the euro dollar are the worst affected on that from how I look at it personally. And when I say worst affected, I say it has the kind of highest volatility during that news, those two pairs. For some reason, I don't know, but it is those two. And other pattern stuff, some of you guys might have seen that I was showcasing a tool that I've been using called Forecaster. You can use that for seasonality and go and check the first week of every month. And you can go and check the average movement on the first week of every month over the last 10, 15 years, 20 years, and see if there's any patterns there. And all we're doing when we're looking at patterns and seasonality or historical data is we're calming ourselves down for future experiences. That's all it is. It's like, well, okay, this happens a lot, you know, and it has historically happened a lot over the last first week of the month for 20 years, 15 years. And when you've got that knowledge, it calms you down a little bit, and it stops you wanting to even get involved, or it makes you want to get involved even more because you know there's a consistency pattern. And once there's a consistency pattern, then you can build a consistent strategy around that, right? But what a lot of people do when they trade the lose is they don't have consistency and they don't have a strategy, and it's just, right, let's just see if we can make a bit more money riding this thing. And it's just like red or black, you know, it's literally that. So hopefully, after listening to us rant on about news, it might just give you a bit of a slap on the wrist, or maybe you think, oh, these guys don't know what they're talking about. I'll trade the news.
Go ahead, try it. I dare you. No.
But just have a rule for it. Approach it with caution. Maybe consider not getting into a trade before and after a certain amount of time, before and after news releases. Maybe have a strategy for managing trades if you're in them around certain news releases. And just, you know, sensibly build it into your trade plan. That's all I would say, until the point where you don't actually get FOMO from these things, or you don't get fear when they're taking place, or you're not making moves in the market that you shouldn't be making leading up to these news releases. So I guess that's it. I don't know if you've got anything else to add, Akil, but
yeah, just one more thing quickly. Now, I love what you said about the fear and the FOMO, because I think it's, as traders, newer ones, it's just that one bad moment that can destroy us. And I think that's the difference between consistently profitable traders and struggling traders, is like, you know, you and me, like, we don't have that bad moment. Like, we don't make that one crucial mistake. We may stay out, we may make a small error, but we don't make that crucial mistake. And it's like, you see traders do everything right for so long, and then like Friday comes, and like you said, the markets have been slow in preparation, and they get so excited. I need to take something. And it's just like a diet where it's like, you're not supposed to be eating something bad. You're like, well, I'm just gonna do it this one time. And you make that one crucial error, and it just throws everything off. And you know, and in the sense of a diet, you eat that cupcake you're not supposed to eat, you know, big deal, not a, you know, doesn't really affect you too much. But in trading, you know, we're dealing with money here, and you can blow everything and just like that. And it's just avoid that one mistake, you know, separate yourself, have that disconnect. You feel yourself getting excited, turn the screen off, go for a walk, hit the gym, like do some type of pattern interrupt to get you away from that emotional situation, and don't come back until you've calmed down, because it really is the driver. We want to be involved in something. That's the key. We don't need to be involved. We want to, because we feel like we're missing out. So yeah, it's tough.
It is tough. But if trading was easy, everyone would be doing it. So
you're right.
There's only a few people watching this with us, and that says it all.
That is true. Yep.
Listen, I think that's a great way to round it off. Just before we go, we will announce that we are running an online event towards the end of March. So book your calendars for the 25th of March. You'll get more news about that if you follow our socials and things like that, and you're on our news email list and stuff. So just throwing it out there so you can pencil it in. And guys, we'll be back next week with another rant and rave. If you want to leave a topic in the comments of this one, just drop it in the comments. And if you're not already subscribed, make sure you hit the subscribe. And we'll see you next week. Take care.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.